If you want to save thousands of rupees in fixed deposits, this video is for you. Because in this video, I'm going to talk about two very important fixed deposit concepts. Concept number one is whenever fixed deposit interest rates go high, which is the case right now, should you break your old FDs or should you not break your old FDs? This point itself will save you thousands of rupees. And concept number two is FD laddering. Very important concept. And if you understand that concept, you are likely to save thousands of rupees on your fixed deposits. With that, let's get this video started. Let's start with concept number one, which is right now in 2023, when most of the banks are offering fixed deposit rates between 7 to 9%, will it make sense for you to break your old FDs or not? For this, I've created a very simple calculator. So have a look at my screen and let us take an example where let us say that you have done a fixed deposit worth 10 lakh rupees and you let us assume that did this FD in October 2022. Right now the current date is 9th of October 2023. So it's almost been a year that you've done this fixed deposit. Let us also assume that the maturity of this FD is in 2027. So it is an FD that you did for 5 years of period. Again, you can change these numbers. I will provide you the link to this calculator so that you can go ahead and put your FD's number and can see whether this is beneficial for you or not. So let us now assume that this FD is for 5 years. And when you did this FD last year, where the interest rates were very low, it was only at 5% interest rate. So what this simply means is that if you do not break this FD right now, you are going to get 12,82,000 rupees after 5 years. So on 30th of September 2027, you are going to get 12,82,000 rupees, which is 2,82,000 rupees of interest. For this, what I have assumed is that your FD is compounding the interest on quarterly basis. As you can see in this formula here, 10 lakh rupees, 5% interest rate for 20 quarters, and your compounding is happening at quarterly basis. So people who have done fixed deposits like this at very low interest rate, this is a great opportunity for you to break those FDs and reinvest the money into higher interest fixed deposits, as you will see in my calculations. And I know that breaking fixed deposits might be long, tedious, time consuming process. However, technology is simplifying it and we need to take advantage of it. And this is where stable money, which is the partner of this video, can help save you a lot of time, because with stable money you can compare more than 200 plus FDs, and more importantly you can open a fixed deposit without having to open a bank account with the FD provider. For example, on stable money right now you can open a fixed deposit with Utkarsh Finance Bank, which is offering you close to 9.1% FD rate without opening a bank account with Utkarsh Finance Bank. Women can also get an additional 0.1% interest rate with Shriram Finance Bank irrespective of their age. You can start investing from as low as 1,000 rupees and your money is absolutely safe because you are directly making this payment to the banks. Lastly, as you can see on my screen, the app UI is extremely user friendly and seamless. Coming back to the calculations now, if you break this FD, the first thing that will happen is the bank will levy a penalty on your FD, and it will depend on bank to bank and the policy and the terms and conditions of your fixed deposit. For simplicity, I've assumed that your bank is going to levy 1% penalty on your fixed deposit, meaning if your fixed deposit was done at 5% rate, your effective FD rate will be 4%, and this 4% will be applicable on the duration of your fixed deposit. So in this case, it will be 373 days. It is simply current date minus the FD date. It gives us 373 days, and if I convert 373 days into quarters, it comes out to be 4 quarters and something. And if I calculate the interest on this, you are going to get 10,41,000 rupees. So I've done a simple calculation here on effective FD rate of 4% and quarters as 4.09. And this calculation gives us 10,41,000 rupees. So this 10,41,000 rupees will be deposited back into your bank account because you are breaking this FD. Now let us say that you reinvest this 10,41,000 rupees and this time you get an interest rate of 7.50% because right now the interest rates are all-time high. So assuming 10,41,000 rupees being invested, and let us say today, which is the current date of shooting this video, 9th of October, you start this new FD, and let us say you keep the maturity date as same, exactly what it was previously, so that we can do like for like calculations. It is going to be held for 1452 days. And if I convert that in quarters, it is going to be 15.91 quarters. And if I now do the calculations using 7.5% interest rate, you are going to get 13,99,000 rupees. That means your interest now will be 3,99,000 rupees. That means if we compare this interest with if you had not broken your FD, which was 2,82,000 rupees, you will be in the profit of 1,17,000 rupees. And this is a lot of money that you can save. And if you like this point, hit the like button and consider subscribing to my channel. But more importantly, you are not going to blindly break all your FDs, because let me run you through case number 2 and case number 3 as well. So let us now assume that rather than you doing this FD 1 year back, let us say you did this FD in 2020. So let me go and change this to 2020, and let us now see whether you are still in benefit or not. Yes, even if you break this FD, you are still going to save 24,000 rupees. But let me take you case number 3, which is, let us say that if you did this FD rather than 2020, you did this FD in 2019. If you do that calculation, you will see that you will be in loss by breaking this FD. So the conclusion here is that you should not blindly go ahead and break your fixed deposit. What you need to do is run through this simple calculator, and it will tell you whether you should break your FD or not. And if you need this calculator, in the comments let me know FD calculator, and if many people need this calculator, I will simply create a user-friendly version of this and I will upload it, and you can download it and make changes as per your fixed deposit needs. So far, if you're with me in this video, continue to watch this, because now I am going to introduce to you the second concept, which is FD laddering. So have a look at my screen, and let us assume that you want to right now put 10 lakh rupees in fixed deposit. The amount here really does not matter. What really matters is the concept. But let us assume that you want to invest 10 lakh rupees for the next 5 years. Your option number 1 is that you do one fixed deposit, which is for 10 lakh rupees, and put it for 5 years, right? Option number 2 is consider FD laddering. What is FD laddering? You divide this 10 lakh rupees by number 5 here, because you want to invest it for 5 years. So split 10 lakhs into 2 lakhs each and do 5 fixed deposits. But more importantly, fixed deposit number 1 will get matured in year 1. Fixed deposit number 2 will get matured in year 2. And fixed deposit number 3 will get matured in year 3, and so on. So almost after 1 year, every year, one of your FD is getting matured. This is called making a FD ladder or FD laddering. Now the benefit of this FD laddering is what? Let me walk you through now. So let us consider scenario number 1, and let us say that after 2 years of doing this FD laddering, the interest rate now goes up from 7% to, let us say, 8%. Now when that happens, what has actually happened is, in your FD1, you did not need to break this FD because you earned 7% interest, and in this FD as well, the second FD, you did not need to break this. You earned the interest at 7%. Happy days. You do not need to pay any penalties on number 1 as well as and on number 2. But if you did one fixed deposit of 10 lakh rupees, you will have to break the entire 10 lakh rupees. That means you will have to pay penalty on the entire 10 lakh rupees for the 2 years that you've held it for. But in this FD laddering, what has happened is, for the first 2 FD, which is 4 lakh rupees, you would not need to pay any penalties. A simple question you might have in your mind is that, Rahul, if I break the 10 lakh rupees FD, if I did only one FD, then at least I will get 8% interest rate. Well, the point is, you will not. For the period, which is 2 years period, you are not going to get the higher FD. You are only going to get the original FD rate, which is 7%, and on top you will have to pay break penalty on that FD, which is what I am trying to say that you can avoid by simply doing FD laddering. So these 2 FDs, you will not need to pay any penalties, and the remaining 3 FDs, what you can simply do is do the calculations as I showed you earlier in this video. And what you can do is, after doing the calculation, you can take a call whether you should break these 3 FDs or not, depending on the penalties, depending on how much of interest rate hike you are seeing, and you can save significant amount of money by just following this approach. Let me now run you through the second scenario, which is, let us say that FD rates goes down after 2 years. So let us say that in this example, after 2 years, FD rate goes down to 6%, then you are extremely safe, because none of those FDs will get any adverse impact. You will continue to hold them. The only downside is that these FDs, for example, the second FD that will get matured, at that point in time, you might need to go for a lower interest rate depending on the prevailing interest rate for that particular FD. More importantly, the third benefit of FD laddering is that you are having liquidity almost every year, because every year you are getting this money back to you, and therefore you can decide what to do with this money. You might want to take higher risk on a particular year. You might want to invest this money in mutual funds or stocks or whatever, depending on the market conditions at the time of maturing this FD. Using this FD laddering concept can be really beneficial for you if you understand the concept. If you liked both the concepts, humble request for you to like the video, and you can consider subscribing to my YouTube channel. Also, I post in-depth exclusive analysis on mutual funds, stocks, and many other assets on my YouTube member community. you can consider subscribing to my YouTube member community. Also, let me know in the comments any specific topics that you would like me to create videos on. I'll be happy to consider your suggestions. I would also highly recommend you to watch this video as well, as it will also help you understand a lot about investing. With that, I'll see you in my next video. Until then, keep rocking.